please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I'm Ritu Singh and you're watching Reporter's Diary. Straight to the big event that we're tracking for you today. GST Council's 25th meeting is currently underway in New Delhi. And as we have been reporting, the Council has a packed agenda. Sources tell us that Nandan Nilekani has made a presentation to the Council on compliance simplification. But that's not all. There's also a lot more on the agenda. Timsy Japaria, who has been tracking the meeting, joins us now. Timsy, what are the key expectations from today's meeting?
Well, let me first get you the details, what has happened till now in the council meeting. Very clearly, there is a major concern cited by all the state finance ministers when it comes to revenue protection. All state finance ministers have asked the central government to think again and see how best they can put in the bill of the compensation, because they feel that the money coming in the compensation cess would not be enough to compensate the cess, the states for this particular year itself. Remember, this is the transition year, and over the last 2 months the revenues are declining, and the state finance ministers feel that in December there is going to be a revenue decline, and states such as Bihar, Kerala, Jammu Kashmir all have cited a major concern. They've asked the centre to look into various other measures how they can put in the bill to compensate the states. Apart from that, what else has been on the agenda, and the discussions have been on the e-way bill. The e-way bill rollout, which is due from 1st February. All states have submitted their blueprint. They've asked, centre has asked all the states to try and roll out the trial run of the e-way bill as soon as possible. Already 14 odd states have started their trial run. Apart from that, on the compliance issue, Nandan Nilekani had made a presentation today on the compliance, how best the GSTR forms can be treated, whether they should be combined, the 3 forms should be combined into one or not, or there could be a simplification of the current format only, is something that we need to wait and see and hear from the union government. Also, apart from that, 70 odd products are up for rate rationalization, primarily on the handicraft side, on the irrigation equipment. Similarly, 40 odd services are up for rate rationalization. Whether they actually go ahead and do this rate rationalization or not is something that we need to wait and see. Apart from that, when it comes to the other issues of GST, especially on the side of taking how government should now move forward, see what is the way when it comes to petrol prices, getting petroleum products under the GST ambit, getting real estate under the GST ambit, is something that we need to wait and see. Especially Kerala Finance Minister, let me highlight, Thomas Isaac has mentioned that states cannot do much when it comes to reducing the prices of petrol and diesel. Rather, Kerala Finance Minister has put it on centre, saying that in the recent past, centre has reduced 2 rupees of the excise, but yes, before that, centre has a share of as much as 8 rupees in the retail price as the excise, and centre should now think of reducing prices. States do not have much scope, again linking it to the revenue decline. So very clearly, a lot is there on the agenda. Let's see what happens finally.
Thank you, Timsy, for bringing us up to speed with what could be expected from the big meeting today. But to discuss this further, we have a whole host of tax experts joining us, and Shireen Bhan also joins us from the Delhi studio to take this discussion further. Shireen, over to you.
Well, thanks very much. It promises to be a long evening here as we continue to wait for the announcements that are likely to come in from the GST Council. It's a packed agenda, as our colleague Timsy was pointing out, from simplifying compliance to rate rationalization to perhaps a discussion on revenue trends as well as compensation. These are on the official agenda of the GST Council. So let's see how much gets done. Harishankar Subramanian, partner, national leader, indirect tax at EY with us. Prateek Jain, leader, indirect tax at PwC India. Daksha Bakshi, executive director at Khaitan and Company. And Suresh Nandlal Rohira of Grant Thornton here with us as well. Appreciate you joining us here on the show. Hari, let me start by asking you, I do know that Nandan Nilekani made a presentation to the GST Council on the ease of compliance, the simplification of compliance. The buzz has been that some of the options presented to the GST Council also include converging the 3 forms into one. That might perhaps require a significant overhaul of the IT system, so we don't know whether they will sign off on that or not. But what would your expectation be when it comes to simplification of compliance?
So the agenda is quite huge, and I don't know how much they will cover, but simplification of returns is definitely on the cards. Well, the whole pressure has been on the number of multiple returns. So I'm sure they're going to do something about it. Optically, they may just say one return. But that one return will definitely have all your outward supplies, inward supplies. That information will have to be there, because matching as a concept is something I don't believe they will give up, from what I'm hearing, because that's the only way they can track the value chain. But the question is, at what level simplification will happen? What do they expect from the taxpayers? Is it going to be one simple filing with annexure formats, which is what I've been hearing for some time? That could be one possibility. In what form the matching will happen? Will it be at the invoice level, or will it be line item level? So those are the areas that are being debated. So I think in the next couple of hours, we'll know what that simplification is. But simplification is something they will definitely try and do. What that simplification means for changes in GSTN or even the various companies and other facilitators like the Suvidha providers remains to be seen. And what is the time they're talking about in the simplified format? Because you'll have to again go back to the drawing stage, which I would say to some extent by the January 10th cycle, some degree of stability was there in GSTN. I mean, I can at least tell you that we filed a huge number of returns. Now you're going to go and change many of these things. So how much of software changes it'll need to be, what amount of testing you need to be, is a question that is what is worrying many,
and that's the point that was made by the Finance Minister of Kerala, Thomas Isaac. In fact, he was of the view that, look, don't tinker anymore. Let the system stabilize. We've put the system in place. You're trying to rectify the anomalies, but let's not once again go in for a significant overhaul, because that will mean, people having to sort of go back to the drawing board and reassess how to deal with the new compliance architecture. So he was of the view that don't go in for anything major. But then we also spoke with other finance ministers and representatives, for instance, from the state of Goa, who did seem to suggest that converging the three forms into one was perhaps a viable option. So let's see what the GST Council finally does decide to do. But Prateek, coming to you now, the conversation is also going to be around revenue, around plugging perhaps what the government sees are leakages in the system. And linked to that is going to be what happens to the e-way bill rollout from the 1st of February. The trial run is already underway, and the government seems fairly certain that they are going to see a significant uptick. And you've been on several of our shows where you've heard the state finance ministers, at least from the BJP-ruled states, say that they believe there's a significant leakage and that the e-way bill will plug that. You haven't been convinced by that argument, but that is at least the hope that they're betting on.
Yeah, so I'm not still convinced. I think there were 11, 12 states who had this system of e-way bill even earlier. And I don't think that we have any empirical data to prove that in those states the revenue collections were buoyant. I don't think to start with that e-way bill is at all required. And I don't think that it will necessarily sort of plug the tax leakage, if any. It could, on the other hand, lead to significant supply chain bottlenecks. Particularly if it is not implemented properly. And we have just started the trial run. As you said, there are a few states which have started the trial run. Most of the states are also starting the intra-state e-way bill as well, within the state as well, which was not the case before GST came in. So I mean, there are unintended consequences which we see. Even let's say you order a mobile phone online and somebody comes in a scooter to deliver it. Technically, if it's more than 50,000 rupees, you require e-way bill there as well. I mean, whether transporters are ready, whether companies are ready, I think there are questions which need answers. And I don't think because the time is really short, that most of the companies will be able to automate the process by 1st of February. So it is going to take time. So one just hopes that it is implemented properly, but we'll have to watch this space. But the government seems quite convinced that e-way bill is the way to go. So from industry perspective, all we are hoping is that it is implemented better than what happened in case of GSTN.
Well, Daksha, let me come to you with the other issue that's likely to be on the agenda of the council today, and that is more rationalization. And we are given to understand that about 50-odd goods and, an equal number of services could be up for rationalization. But the impact on revenue, if at all this does go through, is unlikely to be significant. So what we're picking up is, agricultural equipment, biodiesel buses, things like that might be up for rate rationalization. Given what we saw, on the 15th of November, which was the last big sort of cut that we saw across the board on rates, what would your expectation be this time around?
Well, looking at the ground realities, I think that the rate rationalization is really on the anvil, and it is expected, and it should be there. And the industries and sectors and segments that you just mentioned, they definitely do need this kind of rate rationalization. So, some of them should probably be in the lowest category. Some could be in the middle category, but definitely all of them need to come out of the highest tax rate category. And while I appreciate the revenue concern of the states, I think these are the ground realities which need to be met by the GST Council in terms of ensuring that...
Any specific anomalies, Daksha? Any specific anomalies that you believe they need to correct?
Well, for example, I believe that, the agricultural equipment, for example, since agricultural goods are not subject to GST as such, the significant rates which are there on the agricultural equipments, I mean, that increases the cost of the farmers. So that is something that definitely needs to be rationalized, and ideally, probably it should have been outside the scope of GST, but it cannot be. And if it is not, then it definitely needs to be in the minimum rate. So those are the kinds of things I do believe that definitely need some sort of rationalization for the GST not to be burdensome on that particular sector, which definitely needs a lot of boost, even in terms of other areas of taxation that the government needs to address there.
Okay. Suresh, one of the other items that is on the agenda, not from a decision point of view, but from a discussion point of view, is bringing petroleum and real estate under the ambit of the GST. Yesterday, we heard from the Finance Minister of Punjab, Manpreet Badal, saying that the Congress supports the move to bring real estate as well as petroleum. The issue of stamp duties, Sushil Modi said, is likely to be discussed by the Council today. Do you believe that we're anywhere close to perhaps taking a final call on either of these two issues?
Well, I think firstly, this is like a silver jubilee meeting before the budget for them. So I'm sure they are going to definitely look at a lot of things. And as you rightly mentioned a while back, that we saw like a mini budget on 10th of November. But my gut feel is that while there are challenges in terms of compliances, in terms of rates, also in terms of e-way bill, which we will see, which will be another compliance, I feel they should definitely give a roadmap in terms of real estate and specifically petroleum products. Because the industry is looking forward to petroleum products and at least expecting some roadmap. Now, while we know that probably this may not happen during budget, as the feelers which have been given that they would not want to discuss too many things during budget, and they might keep all of these during such council meetings, having the powers there, I'm sure they should gradually come up with some roadmap that whether they would want to do something about these sectors or not. And that brings more clarity to our economy as well, because while the country is in a situation of dealing with so many issues on GST, a proper clarity on these sectors would really help to all of us.
Right. Okay, maybe we will be presented with a roadmap. I find that maybe today's meeting is not going to be the one that presents us with that roadmap. I think there's just way too much on the plate of the GST Council and not enough time, and they probably are going to focus on the priority items, which is the simplification as far as returns are concerned. But Archit, let me come to you. And, you know, I go back again to the Punjab Finance Minister, Manpreet Badal, and he put out a fairly detailed statement, especially when it comes to revenue collections. His view was that while revenue collections have looked disappointing month on month, in fact, we've seen a decline in comparison to when the GST rolled out in July. He says the picture will look much worse once you start to account for refunds, for instance, to exporters, which still is a problem. What are you being told on the ground?
Right. So I think like in terms of refunds and transitional credits and other things, the tax collection and the mop-up definitely looks worse than what is coming out. Overall, I think that's the entire reason about the government thinking about simplification and the government like of the GST forms and implementing perhaps say matching or taking the measures of preponing e-way bill and getting the industry to comply better to get the tax collections back up. So like sounds like valid concerns, like to be honest.
Yep, we will have to see. Let me get final comments from each of you before we take a break. It's going to be a long evening, ladies and gentlemen, so you are going to have to bear with us and stay with us here on the channel as we wait for the GST Council to make public the decisions that are taken today. But Daksha, since simplification of returns is likely to be top of the agenda, what's your gut feeling in terms of the decision that you expect?
I definitely expect that there should be simplification. While I do understand the merit in the fact that let us stabilize on this GST and form, I do think that simplification is necessary. And even if it is not implemented immediately, at least there should be a roadmap as to which direction it is going to go, so all the systems can be prepared for that. And that is something that I definitely think is necessary.
Suresh, three down to one. Is that what you expect in terms of the forms?
I hope so. And to give you the logic, see, the threshold is 20. Now, a small trader or a businessman doing a business of 2 lakh per month, which crosses the threshold of 20, has to fill in 37 returns, which is 3 returns per month and 1 annual return. Now, how can we expect this? So I hope the government should be conscious about this, and they should try to reduce the compliances and make it easy for the people. So I'm hoping that yes, they would look at it, and on the back end they would try to support that there aren't many annexures to be submitted subsequent to that one return which they are talking.
Okay, Prateek?
Yeah, so I mean, I can't say I hope that it will be done. I don't think it was actually required to merge it into one. Because it will complicate the things. If you continue with invoice matching per se, then having one return, all it means is that you will get this reconciliation report from GST, and at the time of assessment and scrutiny, you'll have to go with a huge amount of data to the assessing officer, because you'll have a report in hand saying that these are the invoices are not matching, but you would have still claimed the credit. So it is on you onus is on the businesses to go and produce or substantiate that the credits is genuine, which is going to be a tough exercise. But yes, I think there is a lot of pressure from industry to simplify, and they might just give it in to that. The only thing I'll add here is that whatever is required, whatever changes are required will take time, and I just do hope that they give adequate time for both GST and as well as the industry before the new system is rolled out. Till the time you just continue with 3B, which is a monthly summary returns. Yeah.
Right. Hari, and I'll close with you, because on the issue of timing, what we were given to understand is that if at all they do decide to go this way, which is the convergence of the forms, then you will require significant changes in the IT systems, and that means that the timeline would perhaps be from the start of the next fiscal year. Would that be adequate if they do decide to go down that road?
Yeah, next fiscal is what I believe they will also look at, because I don't think either GST or the MSP can really produce those in a short period of time. My only worry is we might say it is one return. I don't think the quantum or the quality of data that is going to be given is going to reduce. I don't believe that will happen, because if you do that, then basically you're doing away with invoice matching. And if you don't do invoice matching, you basically then going to be answering too many questions to the revenue officers. So we are going back to the good old system. The whole idea of creating GSTN was you resolve many of those credit issues by credit matching at the outset. So the quantum of data, whether it's one return, whether in that one return there are annexures of outward and inward supplies, I don't believe that can change. Because if they change that, then basically we are going back to what we did in VAT in the erstwhile legacy system. I don't know why then you need a superstructure like GSTN or any of the changes that people went through in the ERP. Well, the pain would have been a complete, absolute. I mean, I don't have words to explain as to why will we revisit in such a big way. So I don't think that revisit will happen. Optically, it may look one. One other thing, Shirin, which I think nobody's talking about, one other topic which has been I would say on the radar is the entire conversation of centralized registration for service industry. The working committee or the law committee or the recommendation committees have come back with that suggestion. I'll be interested to see whether that was on the agenda today.
It was likely to be. That's what we were
on the agenda. And what is the reaction of states? Because the fundamental impediment is the states. That's another area where the industry is looking at very, very carefully.
Absolutely. The states were against single registration, but maybe things have changed. We don't know. We are going to take a break here. When we return, we continue our coverage here, awaiting the decisions of the GST Council. We've given you a heads up of what's on the agenda and what sources are telling us were likely recommendations of the Law Committee as well as the Returns Committee. Which way will the GST Council vote? That's the big question. Nandan Nilikani has made a presentation, according to our sources, to the GST Council on return simplification. That and more when we return. Stay on with us. This is your GST destination.
Well, India Inc. is very optimistic about the economy. The Dun & Bradstreet Business Optimism Index suggests that optimism with India Inc. is at a 14-quarter high. Now, while optimism for selling prices are the highest since the third quarter of 2012, optimism for workforce employed is about a 7-quarter high as of now. So will it result in more investments, more job creation and more demand? We have Manish Sinha, the Managing Director of Dun & Bradstreet India, who joins us now. Manish, welcome on the show, but your report says that business confidence in January-March quarter is at a 14-quarter high. Now, we know the effects of demonetization have waned out. There's been some stability as far as GST is concerned. What exactly is the India Inc. so gung-ho about?
Right. So we summarize 6 parameters when we arrive at the Business Optimism Index. Unusually, in this quarter, 5 of the 6 are actually giving pretty much all-time highs over a period of, 6 to 8 quarters or more, right? So optimism on net profit is at a highest point for 6 quarters. Optimism for net sales is at the highest point for 6 quarters. Optimism for new orders, that's the new orders companies tend to make, are the highest in 8 quarters. Optimism for selling prices is at the highest for since Q3 of 2012. So you're talking about almost 5 years. Optimism for increasing size of workforce, in other words, the recruitment that companies are planning to do, is at a 7-quarter high. So that's the reason why we're saying that the results suggest that this is the highest it's been for 3.5 years. Now, our survey is the result of a sample size of 450 to 500 companies. We take inputs from the respondents, and these companies come out of the proprietary Dun & Bradstreet Commercial Credit Information File. So, as a part of the survey, we also get a sense of why the respondents believe, why are they so optimistic? And if I had to summarize, there would be basically 3 things, right? Firstly, the current victory in the state elections and the upcoming union budget, and indeed the assembly elections of this year, seem to have generated a lot of optimism about government SOPs that could push revival in consumption and investment. So that's one reason. The second reason is that It appears that the waning impact of, demonetization is being felt. There has been some stability as a result of GST being now kind of incorporated for the most part. So there seems to be an optimism on demand scenario for business, right? And the third thing relates to the global economy. So the global economy is expected to pick up steam this year. We believe that India should stand to gain. There's a favorable interest rate differential and continued reforms for improving ease of doing business. All of this should mean that it's laying the fertile ground for domestic and foreign investors.
Right, Manish. So you've given us a bird's eye view of why optimism is high among India Inc. For this quarter. But, if you break it down for us, which are the sectors that are most optimistic and which are the sectors that are least optimistic, and what are the reasons for the same?
Right. So overall, it starts with, for every component, who's expecting the best uptick. So in that, I would say to you that services, in particular BFSI, so banking and financial services industry, appears to be the most optimistic. So they are the highest in terms of 3 out of all our metrics. So in terms of volume of sales, in terms of selling prices, and in terms of employees and recruitment that they expect to make. If I had to look at which are the ones that appear to have the largest presence in terms of the lower levels of optimism, it would be primarily consumer non-durables. So they seem to be the least optimistic in terms of selling prices and in terms of volume of new orders. However, even consumer non-durables appear to be quite positive when it comes to the inventory levels they intend to keep. So I don't know why that would be the case, but that's what the results tell us. So overall, that would be what I would say is the highest and the lowest in terms of the sectors.
All right, fair enough. Just, one quick question before we let you go. What everybody really wants to know is the employment data. Now, will this rise in optimism that you're talking about, will it result in large job creation? And if so, what are the sectors that are likely to be the largest job creators? Or do you think this is just a one-quarter, survey? It's just, will it be a temporary impact, and will the job creation not be very large?
Right. So to answer your last question first, yes, I think that the increase does tend to be significant, even though it's a quarterly data point, because it's very forward-looking, and it is forecasting the level of upswing that a wide variety of our responders is actually telling us. Now, in terms of which services, which sectors expect to see the highest level of employment, it appears that the highest is the services sector, and the lowest appears to be what's called intermediate goods. So these are not the raw material producers, but not the sort of consumer-facing materials, but the intermediate goods. They appear to be the least optimistic.
All right, Manish, thank you very much for joining us on CNBC TV18 with the Dun & Bradstreet Business Optimism Survey Outlook. But now moving on, after Cash and Carry and Walmart, Thailand's largest business conglomerate, the $50 billion CP Group, has announced its India foray into the domestic retail sector today. Now, the company's retail arm has been in India and has been branded as Lots Wholesale Solutions and will focus solely on the cash and carry business. The company plans to invest 1,000 crores rupees in the cash and carry business for the first 5 years and will be setting up 15 outlets in India over the next 3 years. Ronojoy Banerjee caught up with the India managing director of the company. Listen in to that conversation.
We intend to hit 15 stores within 3 years. So that is our internal target that we need to hit.
At a group level, you have operations, you have B2C operations. Could you perhaps, look at that once regulations allow maybe non-food items, because that is something that is at least being considered at this stage?
I think when it comes to the discussion on food retail, I think if the government does revisit the definition of what food entails in, so for example, if the government considers HPC, household and personal care, as part of food, then I think from the group perspective, we would be interested in investing in India through the B2C food retail route.